Good morning, traders, and happy Friday. It is 8:01 a.m. Chicago time on the 26th of January, 2024. This is episode number 2611. I want to remind you that derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have mild risk on sentiment overall. Lots and lots of news in the overnight session. You can see the Russell still pushing higher, but still trading around the 2,000 mark. We come in every morning seeing that the Russell has rallied. The Euro Stoxx 50 also leading the pack. We see the Nasdaq selling off. A pretty clear divergence in the overnight action between the S&P and the Nasdaq. Very uncommon. But there it is. The Nasdaq is off 52 points. The S&P is unchanged for the session. Big news today. Key earnings we had this morning: American Express, Colgate, Palmolive, Norfolk Southern, Autoliv, and others. There are none after the close. The big themes for today are, crude's big push yesterday higher, mainly on geopolitical news, basically war news. T-Mobile misses, reports 167 versus 190 expected. Intel beats big time, 63 cents versus 45 cents, but the Q1 guidance was really bad. Big drop in guidance on EPS and revenue in Q1. Intel weighing down the tech sector, and that's what you're seeing reflected in the Nasdaq this morning, despite the good earnings for last quarter. Their guidance is pretty awful. So that's a theme today. Visa beats. Tokyo came out with its CPI and came in pretty weak. Major shippers have decided that they're avoiding the Red Sea entirely. This adds to shipping costs and energy consumption. Again, that's beneficial to crude longs. ECB Simcas says no expectation of March cut. Amex reports 262 versus 264. And we just got the U.S. core PCE, which misses on a year-on-year basis. What do we have left? We have pending home sales at 10 o'clock out of the U.S., Canada budget balance at 11, and then a Baker Hughes rig count at 1, and then the China industrial profits year to date at 8:30. The ES is in a multi-distribution up auction. Very clear three-pronged distribution. Really good volume today, 221,000 contracts. The inventory is 82% short. A lot of, because we closed relatively strong yesterday and we traded mostly inside of yesterday's range, which traded inside of the prior day's range. We have the inventory is mostly short. I would take this with a grain of salt here. I would not lean too much into the fact that that the inventory is 82% short, that there will be a pop on the open. In this context, it doesn't make sense. The range of 30 points tells us there's quite a bit of activity in the overnight session in terms of price discovery. And again, we find ourselves with a point of control just above the 4,900 century figure. That's what we've got. Here's what the markets are showing. So yesterday, day before yesterday, open, move down. That was the expectation. Retest down below the 97 area right here. Got that done. Tested up, and then finished bearish. Still holding above the 2-day balance. Still holding above key areas below. Yesterday opens right in range as expected. And remember yesterday, there were two key plays yesterday. Scenario 1 was looking for a push to 27. Scenario 2 was looking for a push into, what was I looking for a push into? I forget because my brain is not functioning very well this morning. Let me pull up the video here and go right to the proof of what was covered. Here it is. Bonk. This is yesterday's video. Let's make sure it's in high def. So you can see that I was looking for the 27 up here, and then, oh yeah, settlement. That's what I was looking for. Settlement, and if settlement doesn't hold, then we're looking for the 85.83. So settlement, 85.83. Remember these lines I put here that coincide with the 97.98, which turned out to be settlement as well. So settlement was a key target for scenario 2, and if settlement doesn't hold, we're looking for 85.83. So scenario 2 is a gap to settle. I wrote it right in here. Gap G2S, gap to settle on scenario 2, and scenario 1 is 27. Let's see what happened. ¿Qué pasó? So we open up, wrong product. We open up, right in here, the 19, which is where we are now. And what do we do? We consolidate choppy open auction in range. We're opening inside of the prior day's range, inside of the prior day's value. This is value right here, and so the expectation is a test of point of control, and then we finally get there and squeeze, and we miss it by 2 ticks. 2 ticks. Okay? Immediately sells off, pulls back, retests the VWAP from below, chops around, and then it extends lower, and it goes right to the 98, pushes through the 98 by just a little bit. Yesterday's low was 98 and a quarter, right? 98 and a quarter, I believe, or 96. No, 96. Yeah, 96.75. Let me see. Yep, 96.75. So push through the 98. So what we had here is scenario 1 minus 2 ticks, and scenario 2, very generous market. Scenario 2. So we saw both of these play. Both of them kept us inside of the prior day's range. So yesterday was simply a balanced day inside of the prior range. And then what we have today is basically another day that's inside of the range, but today has 3 distributions. So we have pretty clear boxes to trade with this morning, right? Coinciding with these volume profiles. We're holding the middle box. The overnight point of control is in line with yesterday's point of control. We see VWAP basically at the same price. Despite the multi-distribution, despite the price discovery in this process, overall the market is in balance. In the bigger picture, the market's in balance. And look at this delta. It is non-existent. So there's no real aggressor volume delta. It's pretty flat, and it's just kind of going sideways. There's a lot that the market has had to price in. This week. We were about 25% of the way through the major stock earnings reports, and then next week has just a lot to deal with, and next week actually carries some potentially negative news, including a very likely softening of the labor market. We do get next week. We do get the JOLTS number. We get the inflation numbers out of Europe, we get the rate decision, and then we get uh, uh, ISM, we get inflation out of Europe, we get the Bank of England decision. Also, next Friday, we get non-farm payrolls and unemployment. A lot to price in next week. Next week's probably going to be full of movement, a lot of volatility expected. And this market's just kind of sitting sideways here as it prices these things in. Look at this. Look at the way the overnight session is postured versus the NQ. So you look at these things, the NQ is below the prior day's range and has made some headway on the way back, but again, it's got its overnight point of control, VWAP, and mid on top of each other. There's some active price discovery, but it's struggling to it's struggling to maintain in either direction. Sellers got exhausted. We have a weak low here. Buyers step in. We have, again, a multi-distribution profile, but it's lower than the prior day's range, which is lower than the prior day's range beyond that. The NQ is kind of overextended itself. There is a positive delta in the NQ. But the divergence between these products this morning is likely to cause some choppiness, some headwind for day traders, which is us. There's not much congruence or agreement between these products, and so the ES is likely to do very full price discovery, meaning go all the way up and go all the way down and just check areas quite wide. We're opening right in the middle of balance despite the action overnight. I'm expecting a choppy open is the conclusion. Okay, that's what I'm looking for. It's very, very likely to be an embattled open this morning. We did tag the 28. We went and kind of took out yesterday's high, the IB high, the naked point of control. We took that out overnight. The expectation this morning is an open auction that pulls back a little bit to test the range into the 49.10, expecting an impulse higher, consolidate, and then I'm looking for the gap, the settlement price to be taken, which is at 49.23, and I'm expecting the 27 to be taken, and for us to start walking ourselves back into higher prices. It is the end of the week, and we've had a bit of a run this week, so look for some profit taking into the end of the session. Again, Delta not showing any real aggression, and we're opening on top of the overnight point of control, VWAP and mid, so it's likely to be a choppy open. Recommend that you don't engage early. Let the market set up. Let it show you what its intention is before you step in. But the key thing we're likely to test today is the 27, which brings us into the overnight stat being taken out, and then from there we just kind of push right through into the 40s and work ourselves through this last high that we left behind at 33 and a quarter. That's my lean this morning. If it's unsuccessful, open auction, tests up, gets the settlement, unable, falls through, whichever direction the impulse is in. I'm looking for the continuation. and we're looking for it to stabilize and then retest that 4900 area, come back in and sit sideways. So we'll have 3 days of balance here, setting us up for a break earlier next week, right? Again, lots to price in next week. Okay, so those are the two key scenarios. I'm going to leave you with that. It's 8:16 currently. I'm Convergent members. I am off today, taking the day off as I mentioned yesterday. You're in good hands with the Mavens in the Maven channel for guidance, commentary on the market, and hopefully you've had a great week. Good luck, everyone, and I'll catch you on Monday morning. Take care.